Welcome again. Our next topic is inheritance tax, a very important topic in the syllabus of F6 ACCA. So let's start. Inheritance tax. It is charge on transfer of value of chargeable property by chargeable person. So in this definition, we need to identify what is meant by transfer of value or chargeable property or chargeable person. First, transfer of value. It is said to be gift of any asset which causes reduction in the value of donor's state, and it can be calculated as value of state before transfer and deduct from this value of state after transfer. You will get the value of transfer of value. Remember that as a result of bad business deal, there may be a reduction in the value of donor's state, but this is not said to be the transfer of value. For transfer of value, there must be a gift of any asset. Chargeable property. All property to which a person is beneficially entitled is known to be the chargeable property. And chargeable person, all individuals are potentially liable to inheritance tax. Potentially. If an individual is a UK domicile, he has to pay inheritance tax on his worldwide assets, and if he is not a UK domicile, he has to pay inheritance tax on UK assets. Now, what is the occasion of charge? At what occasion inheritance tax is charged? It is charged on the lifetime transfer, and it is also charged on a gift on the occasion of death. Now, first about lifetime transfers. These lifetime transfers are potential exempt transfer and chargeable lifetime transfer. What is potential exempt transfer? Potential exempt transfer means a transfer which has a potential to become exempt. It is said to be gift between individuals. No inheritance tax is charged at the time of gift, and no inheritance tax if the donors survive for 7 years after the date of gift. So that is why it is said to be potential exempt transfer, that it has a potential to become exempt. It is chargeable to death tax if donor dies within 7 years of the date of gift. Now, what is meant by chargeable lifetime transfer? CLT, chargeable lifetime transfer. Any other lifetime transfer is said to be chargeable lifetime transfer. And for the F6 syllabus, the chargeable lifetime transfer are considered gift to trust, or you can say gift to trust in an example of chargeable lifetime transfer. The chargeable lifetime transfer are chargeable during the lifetime for lifetime tax. Additional tax may become payable if the donor dies within 7 years of making gift, in which case additional tax has to be considered. For example, if during the lifetime the tax charge is 8,000 and at death again the tax calculated and charge is 10,000, it means that the 2,000 further tax or additional tax may become payable for the donor if he dies within 7 years. But remember here one point, if during the lifetime tax is charged 8,000 and at the date of death of donor when tax is calculated the tax charge is 7,000, in that way there is no refund of tax. There is no refund of tax. If at the time of death the tax charge become greater the additional amount has to be paid by the executors. While if at the time of death the tax charge is less than the tax that was charged during the lifetime, there is no refund. Now we will discuss about the exemptions that are applying to lifetime transfer only. First is said to be small gift exemption. It is £250 per person per year. If any person make a gift of £250 up to £250 to a person in a year, that is said to be exempt, and this exemption is known to be small gift exemption. Marriage exemption, it is the amount of £5,000 that is exempt on the occasion of marriage if the gift is given by the parent. If the gift is given by parent, and if the gift is given by the grandparent or ancestors, by grandparents, it is the amount of 2,500. If the gift is made by bride to groom or or by groom to bride, then in that case also 2,500 is exempt, and by any other person gift of 1,000 on the occasion of marriage is exempt. Normal expenditure out of income, if the expenditure made by the person is considered as a normal expenditure of that person out of his normal income, then it is also exempt. For example, school fee of a child paid by the individual is said to be the example of that type of exemption. Annual exemption is £3,000, but unused annual exemption can be carried forward for 1 year. Unused annual exemption can be carried forward for 1 year only. But remember in this regard the first point, that first you have to use the current year exemption, then unused annual exemption of previous year is to be used. So, remember that point, first you have to use the current year annual exemption, and then you can use the unused annual exemption of the previous year. But main point is that unused annual exemption can be carried forward only for a year. Interspouse exemption. Interspouse exemption is for lifetime transfer and on the death estate, and it is said to be exempt. If the life partner has gifted to each other, then that gift is always exempt. Now it is about the format of presenting a question. If it is a chargeable lifetime transfer, first you have to consider what is the date of gift. If the date of gift is, let us say, 22nd June 2020, then from this date you have to identify that this is a tax year 2021. First you have to mention the transfer of value, the amount of gift, then you have to apply the annual exemption of current year, and that is 3,000. Then you have to apply, if there is unused previous year annual exempt amount, you have to apply this, and after that you will get this figure, and this is known to be chargeable amount. Now later on I will tell you about the nil rate band. Nil rate band is to be applied. This is 3,25,000 for the current year, and you have to deduct the gross chargeable amount. If this nil rate band has already been used, the gross chargeable amount of that would be reduced from the value of nil rate band, and remaining nil rate band is to be applied there. Now you will arrive at taxable amount. Then if there is any IST payable, that is to be considered here. Who will pay by this means IST might be payable by the donor himself or the donee or the executor. What is the due date and what is the gross chargeable amount. So this is about the chargeable lifetime transfer, and for the potential exempt transfer, again you have to mention the date and identify the year, and after that the transfer of value. In transfer of value, from transfer of value you have to deduct the current year annual exemption and then previous year annual exemption and the same point. But for the potential exempt transfer you don't have to use the nil rate band, right? And there is no taxable amount in the potential exempt transfer, and if there is no taxable amount, no IHT payable, there is no need to consider about the who is paid by and what is the due date. So this is about the format of the inheritance tax. Now the rate of taxes are, for donee it is 20% and for the donor it is 25%. Due date of payment. If the date of gift is between 6th April to 30th September, then following 30th April is said to be the due date for the payment. If the date of gift is between 6th April to 30th September, then following 30th April is considered to be the due date. Like for example, if the gift has been donor has gifted an item, or I said on 25th May 2021. In that case, this is the date that lies between this period 6th April to 30th September. So that is by following 30th April, means after 25th May, whatever 30th April comes is said to be the due date, and that is 30th April 22. Same is the case if the gift is made on 28th August. This date again lies in this period of 6th April to 30th September. So following 30th April would be again 30th April 2022. But what if the gift is made between 1st October to 5th April? If the gift is made between 1st October to 5th April, in that case 6 months after the end of the month of CLT. 6 months after the end of the month. So first we have to recognize what is the end of the month and then add 6 months period. Like if the date of gift is 11/11/21, means 11th November 21. In that case, first you have to go to the last of this month, that is 30th November 2021, and then add 6 months to this. This will give you 31st May 22 as the due date. And if the gift is made on 25th January 2022, then you again want to go to the last of this month, that is 31st January, add 6 months, and this will be the due date 31st July 2022. Now about nil rate band, the lifetime transfer applicable to CLT. When there is a CLT, unused nil rate band is calculated. For this, gross chargeable amount of last 7 years is considered. What you have to consider? Gross chargeable amount of last 7 years is to be considered. Nil rate band for the current year is 3,25,000. Now a practical example from the study text of Kaplan. Maron made the following lifetime gift. On 31st August 2020, 600 to her son, and then 31st October 2020, 800 to a trust. Remember, gift to a trust is said to be chargeable lifetime transfer. Then on 31st May 21, the gift is again for the trust. On 30th November 21, the gift is again to the trust. And last gift of 30th April 22, 5,000 to her daughter. So the gift that is except trust to anybody else, means to any other individual, if the gift is made by the donor, it is said to be potential exempt transfer. Now what is the requirement of the question? Calculate the chargeable amount after annual exempts for each of the gift. So you have to make first of all you have to mention that whether this gift is a potential exempt transfer or a chargeable lifetime transfer. In case of A, it is a gift that is made on 31st August 2020, 600 to her son. So it is said to be potential exempt transfer. Date of gift is 31st or 31st August 2020. So this is a tax year 2021. The transfer of value is 600. When you deduct the annual exempt amount of current year from this, there is no chargeable amount. Second gift is said to be on 31st October 2020, 800 to a trust. So, again first we have to mention the gift, the type of gift, that is chargeable lifetime transfer. Amount is the date is 31st October 20, again the tax year is 2021, transfer of value is 800, and as you know that the annual exempt amount is 3000, and we have yet to utilize 600 out of 3000, remaining 2400 is available to be used. So, out of this 2400 you use 800 to make this chargeable amount again 0. Now, about the third gift, that is on 31st May 2021 to a trust. If it is a trust, if it is a gift to a trust, then this is said to be chargeable lifetime transfer. The date of gift is 31st May 21 and the amount of gift is 2100. So, it is to be the current year annual exempt amount is used and the chargeable amount is again 0. Now, for the fourth gift, this is on 30th November 21 and again to the trust. So, if it is to the trust, the chargeable lifetime transfer is the type. Date of gift is mentioned as 30th November 21. So, first you have to mention this also, that if the previous gift is on 31st May 21, then it means this is a tax year of 21-22. So, for the next gift is concerned, it is also made on 30th November 21, which is the tax year 21-22. So, in tax year 21-22, we have utilized so far 100 of annual exempt amount. So, 900 of annual exempt amount is available. So, first you write transfer of value, which is for the fourth gift 1100. Out of this 1100, you have current year annual exemption amount available, and that is 900. How it is 900? Because 2100 in this current tax year has been utilized in case of previous gift made on 31st May 21. Now, you have to consider whether your any of the previous year annual exempt amount, unused annual exempt amount is available. So, look at this, in the previous year you have utilized annual exempt amount in total 1400, annual exempt amount is 3000, in the previous year you utilized 1400. So, it means 1600 of previous year annual exempt amount is unused. Out of this you can use 200 of annual exempt amount to make this gift, make this chargeable amount related to this gift as 0. Now, about the fifth gift, that is made on 30th April 2022 to her daughter, that is potential exempt transfer, date is 30th April 2022. So, the tax year is 22-23. 5000 is the amount of gift, 3000 is the annual exempt amount of current year that is to be used. But remember that in the previous year, the previous year's annual exempt amount has been wholly utilized, and remember annual exempt amount can be carry forward for 1 year only. So, that is why there is no unused annual exempt amount related to previous year available. So, that is why here chargeable amount is 2000, right. Now, the next question again from the Kaplan study text. Kendall makes a gift into a trust on 13th of June 2022 of 3,66,000. They have made no previous lifetime gift. Calculate the amount of lifetime IST due on the gift into the trust, because the gift is into the trust. So, it means this is a chargeable lifetime transfer, and state the gross chargeable amount of the gift to carry forward for future computation. Assuming the trustee of the trust have agreed to pay any IST due. Trustee mean here donee agree to pay. So, if a donee agree to pay, the rate of tax is 20%, and in the second situation Kendall has agreed to pay any IST due. So, first we have to consider the gift type, that is chargeable lifetime transfer. The date of gift is 13th of June 2022. So, the tax year is 22-23. First, you have to consider what is the transfer of value. So, it is 3,66,000. Out of this, you have to deduct the annual exempt amount of current year. Current year annual exempt amount is 3,000. As you have been mentioned here that they have made no previous lifetime gift. So, it means that previous year annual exempt amount is unused. So, previous year annual exempt amount is to be utilized to make the chargeable amount 3,60,000. Now, you have to consider what is the nil rate band, because it is a chargeable lifetime transfer. So, you need to consider about the nil rate band. The nil rate band, as there is no previous gift, nil rate band of whole 3,25,000 available. As a result of this nil rate band, the implication of nil rate band is that it reduces the chargeable amount. This is the chargeable amount. After annual exemption, you will get the chargeable amount. And from chargeable amount, if the gift is chargeable lifetime transfer, you have to deduct the available nil rate band. Here full nil rate band is available. So, the taxable amount is 35,000. Taxable amount is 35,000. In the first part, we have considered that trustee agree to pay the tax. So, you have to mention paid by trustee. Amount of tax is 20%, because trustee has to pay the amount of tax is 7,000. How it is 7,000? 20% of 35,000. Right? Due date would be, as the date of gift is 13 June, as the date of gift is 13th of June 2022, following 30th April would be the due date, and it will be 30th April 23. And now, the gross chargeable amount, the gross chargeable amount is 3,60,000. Whatever is the chargeable amount is said to be considered the gross chargeable amount. So, this is in case of a trustee agree to pay the gift tax. Again, the first of all, you have to consider the type of gift. This is chargeable lifetime transfer. Then the date of gift, identify the tax year, the transfer of value, deduct current year annual exempt amount, previous year annual exempt amount, you will get the chargeable amount. As there is no previous gift, previous lifetime gift, so it means the whole nil rate band is available. Deduct the nil rate band from this, you will get the taxable amount. And from this taxable amount, you will have to calculate the tax charge. And if the trustee has to pay the tax, if the donee has to pay the tax, the rate of tax is 20%. So, that is why the tax is 7,000. The due date is 30th April following 30 June, and the gross chargeable amount is 3,60,000. This is in case trustee agree to pay. If the donor agree to pay, candle agree to pay the tax, then again the chargeable lifetime transfer, the type is same, date of gift is same, tax year is same, amount 3,66,000 same, current year annual exempt amount, previous year annual exempt amount is to be deducted from there, and you will get the chargeable amount as 3,60,000. Same 3,25,000 of nil rate band is available, which reduces the taxable amount to 35,000. But here the donor agree to pay the tax. So, if a donor agree to pay tax, then the rate of tax is to be considered as 25%. So, it will be 8,750 the amount of tax. Due date is same, 30th April 23, but gross chargeable amount in case the donor agree to pay tax would be chargeable amount plus tax. Both should be added to get the gross chargeable amount. So, in case of donor agree to pay, the gross chargeable amount would be 3,68,750. So, this is the basic of inheritance tax, a very short duration of lecture, but important one. So, that is why this basic should be understand well before attempting the full length question. From tomorrow we will start the test your understanding 5, which is a full length question, and then test your understanding 6 and 7, but before that you must understand this up to this point.